morning, everybody. It's Pax and Penny Lane, Blayne back together by popular demand. Hello, Penny. How you doing, sister?
I'm good. How are you, Pax?
I'm good. Welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using CME, event contracts, E-mini, S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude, natty gas, and copper. Today's broadcast is brought to you by Trade-Of-8, who has built a custom app dedicated to trading CME group event contracts. I'm no good at this. This is what we're all using at Place Your Trades, and we'll post it in a little bit. We'll share our screens. Use the link to the right of this video to check out Trade-Of-8 web app for free. You can download the app and use it without opening up an account, just so you get kind of used to how these things work, how the event contracts work. It's very actually kind of cool. And if you're a subscriber to our site and you open a Trade-Of-8 account by March 1st, you will have a chance to win a bunch of prizes in the months ahead. One of those is a giveaway trip to Las Vegas, where we were joined the Place Your Trades team at the Money Show in April 23rd, the weekend of April 23rd. I'm excited about that. We're all going to be together. Many of us have met before in person. Some of us have not. So all of us are going to be together at the Money Show in Las Vegas. So register, go to the website, register, placeyourtrades.com, and register for a chance to win a free trip out there. If you don't win the free trip, Vegas is relatively inexpensive. Jump on a flight and get out there. It's going to be a lot of fun, and I'm really, really looking forward to it. So good morning, Penny. How are you?
I'm good. How are you, Pax? I can't wait to meet you in Vegas.
I can't wait either. It's going to be a lot of fun.
So fun. So fun. You know, I love Vegas.
I've only been to Vegas a handful of times in my life. I don't like equating trading with gambling, and many people do. I don't. I work hard for my money, and, you know, I know what it's like to have none of it, to have nothing. So, however, there's great restaurants, great places to great things to do. So I'm looking forward to that aspect of it. And being with you, I am looking most forward to being with you.
You know, I'm not a huge gambler either, because I like rolling the dice. You know, everyone cheers for you. It's very exciting. Otherwise, I also do not care to lose money. I talked to my husband about it. Like, what's my max loss for this Vegas trip? And I said $500. And he goes, you could double it to 1,000. If you come home losing less than $1,000, you did fine. And I was like, okay.
Do that. And the only craps I've ever played is against somebody's wall in an alley or in somebody's basement in the south side of Chicago.
Oh, that sounds fun.
It is fun. It was fun. It was, we did that a lot when we were kids. So how has your last couple of weeks been? In light of Capital Preservation Friday, I mean, I know because we've talked a lot, but how has your last couple of weeks trading been since we've last spoken on the Place Your Trades Network?
So I looked at my account graph or whatever, you know what I mean? Like the graph of how I've done so far this year. And it has been a nice, I think it's called an equity curve. It has been a nice upward trending equity curve, which I've never in 2.5 years been able to achieve. It's always been either down or just bumping along. So in that respect, it has been really good. However, I don't talk about this very much, but the reason that I post my P&L every day is because, and it's such a selfish thing, but I really believe that I will eventually get to be really good at trading. And when that day comes, I don't want anybody to say that I'm not being honest about getting there. Like, I want people to see how hard it's been so that when I finally am good, people are like, damn, she put in the work. She struggled, but like they believe that I really can do that. And I think that that's an honorable goal. And I stand behind that. But the pressure of every single day knowing that I have to show people on the internet what I did is so much pressure that it gives me some anxiety. Sometimes, especially, you know, if I'm red, it's a little bit harder for me to just walk away because I'm like, well, I don't want to be red, you know? And I think every trader struggles with that.
Let me ask you a question. Will you take extra trades? Well, I'm red. I don't want to be red. I'm going to post my P&L later. I don't want people to think I suck, or I don't want to have another red. I don't want to be a bad example. So will you take extra trades based upon that?
Yeah. Sometimes I'm just like, I know I can get back to even. And 90% of the time I do get some, maybe not back to even, but I can make a green trade after red trades to have a less red day. But like at some point, that's going to really burn me, I think.
And it does. A week or so ago, when you were down 4,000, ended up losing $8. You know what a swing that is,
right?
But, you know and we talked that day too. Anyway, there's a couple of things that come to mind, and one of them is trading your P&L is never a good idea. So, you know, being focused as traders, being focused on your result over your process is dangerous. So when you start to think about, you know, I need to take a couple extra trades because I'm down a little money. I don't want to blah, blah, blah. You know, I don't want to be red. I want to be positive. And when I do that, I usually trade well, right? That is very dangerous because now we're taking extra trades that otherwise our process would not call for. However, you trade better when you're down money. I was, for a very, very long time in my career, the same way. If I had a day where I had a really bad day, and I'd always close down my screens or walk off the trading floor, and I would, you know, I'd feel relieved, like, okay, good, I got that out of my system. Now I'm going to go on a tear and make a bunch of money. Because what that does is it hyper focuses you on your process. You know, so when you have a bad day, a bad trade, or a bad, you know, whatever, you become almost hyper focused on what the market is doing, and your timing becomes better. You take the trades that you should take and you miss the trades that you should miss. So in that aspect, you have to learn how to shift your focus to always trading like you're behind the eight ball, you're behind the curve, like you're down money, so that you don't have to have that adversity, or you don't have to have that pressure that you know, as you said it, you don't have to have that pressure to come and weigh on your chest before you're able to become hyper-focused on price action in the markets. And I think that's very, very interesting thing. And many of us trade better after when we're down money or after a run like this. You know that you've matured as a trader when your morning routine and everything that you do helps you prepare yourself to the point that you don't have to trade like that in order to become hyper-focused on what the market is telling you. You know, how many trades have you had on, like on Wednesday? The S&P went from like 40.60 to, I forget what the high was, 41.41. You know, we rally like hell. You know, how many days have you had a trade on, you know, and you're patting yourself on the back? Oh, great job, I've got them. Great job, I've got them. Meanwhile, if you were down money, you would have been adding all the way. You're more aggressive. You're adding. You're trading it really well. You're taking profit, paying for your trade. You're adding. Taking profit, paying for your trade, adding. You know, so instead of a $300 or $400 day trading the SPYs or IWM, you're up $1,000, $1,500, $2,000. Or like you were the day you were down $4,000, you turn around and you make it back. It's that hyper focus that really starts to propel you forward, so you make back that money. That is going to be the mark of a truly mature trader, when you are able to trade like that, because the price action and the market is dictating you to. We talked yesterday about your position. You were a little bit overextended. You had a few too many on. So the answer to that is simple. You had them on from the right spots. The market was going to do what the market was going to do. Take profit on them, take some of them off, and then let the market do what it's going to do and stay out of its way. Either we're going to extend higher and we're going to get a whole nother leg up. You were long, you know, and that's going to happen. We're going to fill that gap in the S&P 4220. From August 22nd of this year or last year, or, you know, we're going to come back down, in which case you've already locked in profit. You can't lose any money. You made like 1,200 yesterday. You know, there's no way that you can lose money on that trade. If it extends, you're going to make 3,000 or 4,000. If it comes back down, you made 1,200. It's a pretty damn good day. Yeah. You put yourself in a position to really reap the benefits of what we do, because you were focused on what the market was telling you, because you took those trades and you were positioned for what the market is going to do, and you were protected against its downside. So that's the best kind of trades. The uncertainty of trading, you know, when I buy 41 or whatever price, you know, if I buy 41s, the uncertainty is going to really weigh on a lot of us, right? It causes pressure. It makes us feel it in our chest, or, you know, it just feels like somebody's standing on us, that pressure. But once we remove that uncertainty, and that's either by the market, you know, if I buy 41s, the market goes 42 bid, and I put in a scratch stop, my outcome is no longer uncertain. I don't know if I'm going to make money, but I cannot lose money. I've got a scratch stop in. I can't lose money. I know what the worst case scenario is, and so nothing negative can happen to me. I have nothing to fear from the market. I don't fear the market. The market is either going to stop me out, in which case no harm, no foul, or it's going to come up and pay me and put some money into my pocket, and it's going to extend, and it's going to, give me a really, really good profitable day. That's it. That's trading in a nutshell. It's that easy. And if I buy those 41s, the market goes 41 off, or I'm out, and then I can take another stab at it. That's it. So I spend a little bit of money. But as traders, we need to keep our costs low. I don't lose money. Remember, I don't lose money. I spend money. So as any other business, I need to keep my costs low, and I need to keep my profitability high. And trading affords us that all the time. I think that when you strike that balance between that hyper focus, that being down money or being behind the eight ball a little bit, you strike that balance to be able to trade like that all the time as a result of maybe your morning routine and your habits during the day, and your preparedness and your stick-to-itiveness, your stick-to-itness. It's a made-up phrase, but you know what I mean? When you stick to it, you prepare, and you go through your morning routine, then that helps you hyper-focus. When I was behind waiting for you to come in here earlier this morning before our show, Savannah came in, and I was listening to music really loud. That's the last thing I do every single morning. I listen to music, I sing, and sometimes I'll dance if it's a good song. I get up and I dance in my office, and I look like an idiot. My kids used to call it the silly dance, but it's the last thing I do because it gets my blood flowing. It gets the dopamine going in my body, so I don't have to get that first dopamine hit when I make a trade. And I don't have to get that adrenaline rush when I make a trade. I'm dancing around to, Back Streets by Bruce Springsteen this morning like an idiot, but I'm having a good time doing it.
Oh, I'm going to the Bruce Springsteen concert tonight.
Oh, are you really?
I am.
Oh, man, he's not coming to Chicago, I don't think. I think he's going to Milwaukee. I was looking yesterday.
The boss.
Oh,
the boss.
Great. I'm so jealous. I love Springsteen. Do you love him or like him?
My husband loves him, and I appreciate him.
Oh,
it's a good balance, I feel.
That's another reason why we're not going. Jen doesn't like him, and I love him. I love Springsteen. That's great.
Actually, there's a Jimmy Buffett concert here in Atlanta the night before we're supposed to leave for Vegas.
Oh.
And I'm very torn because we've been to Jimmy Buffett a ton of times. And actually, we got engaged like right before a Jimmy Buffett concert. So it's also like our second date. Like it's a big, big thing for us. But then also, who wants to go to a Jimmy Buffett concert and then fly to Vegas the next day?
I do.
I'll fly
to Atlanta and then fly to Vegas to see Jimmy. I love Jimmy Buffett.
We have Atlanta is a hub, if you will.
It is.
A lot of connecting flights right through Atlanta.
I can hub from Chicago to hub in Atlanta and fly out to Vegas. I can't wait for Vegas. I can't wait to hang out with Tracy and Swing Pony and OG and everybody. Anne Marie is
Julia.
Oh yeah. I mean, we got a great group of people, and we really do. Here's another thing too I wanted to mention. Everybody go to placeyourtrades.com and look at the chat. There's a chat that we have in there where all of us are during the day will pop in and give our market thoughts or just market things that we're seeing in the market. We'll give our perspective on things, in light of not just event contracts but also trading.
Pax, I would love a big red day. I would. I live for a big red day.
Now we're talking. Okay. I don't think I've made it a secret that I've been bullish for these last couple of weeks. 39.12 in the S&P held at the same time 11,327. If we held up to 39.12, the next flattened target was 41.87. We completed that entire swing. I flattened up my longs at 41.87 actually yesterday coming out of the opening range. And then I haven't really done much. So I'm still bullish, but in order for the S&P to rally, it needs to get back above 41.87. In order for the S&P to rally, we need to get above 41.87. We are obviously starting to break, and I think that everybody and their brother right now are going to take the nose at 41 even.
So for $4.25, which is not a bad cost.
No, it's not. That's the only reason I would take it is because it's low.
Should we take some?
Yeah, I would take those. After the market opens, and if we start to work back above today's opening range, we get back above 41.40, the same levels, 41.41, and then of course intraday targets like 41.60. But we start working above yesterday's opening range, we'll head back up to 41.87. We get above 41.87, then 42 evens are not out of the picture.
$1.75.
Yeah.
I mean, why don't we just $8.75 to make $100. It's willing to spend that. I'm going to take it.
Yeah, go ahead. I mean, it's a buck. It's $1.50, and it's a long shot. It's not gonna spend more than that. Last night when I sent my daughter money for sushi.
Sure. Uber Eats, man, we're big on the Uber Eats right now. Let's look at the Russell, my fave.
Oh, Russell's been an interesting trade. Russell opening up at 1986 is, we talked about that level yesterday and the importance of it. 1986, the important levels in the Russell. 1986 in the S&P, 4187 in the NASDAQ, 12,800, 12,808 to be exact. So 1986 equals 12,808 equals 4187. The Russell is opening right at 1986. I mean, that's amazing. I would feel much more comfortable taking an event contract trade once the market opens. But if I had to take a guess, I think that we take the nose for $7 underneath 1975. If the spoos start to break, if the S&P starts to break and takes out that 41 even level, then Russell will take out that 1950 level. So I think you can take some long shots at 1950 in the Russell.
Nose.
For $2. Yeah, why not? If we get under 1975, I think we see 1950 pretty easy.
The fact that I want a big red day means there's like a 95% chance we just continue ripping higher. It's just the way it works for me personally.
Well, not necessarily. All right. So another thing, everybody is so opinionated on what these markets ought to be doing and what they are doing. I think the market selling off today is actually very healthy for the rally to continue. The RSIs are overbought. I mean, everything is looking to overbought conditions. So a nice intraday sell-off, maybe a gap and go on Sunday night or a gap and go on Monday morning would be a good, healthy move for the market. I have these flattened targets that I talk about being flattened targets. 41.87 is that flattened target. 39.12 on the downside, the next one. When we get to these levels, we're going to churn them before the market decides whether or not to extend higher or to come back down and attack the lower levels. Right now, it looks to me because of the non-farm payrolls, because of the earnings and everything that came out yesterday afternoon, the ECB, the BOE, and then the Fed earlier this week, we can start to trail back off into at least where we opened on Wednesday, which was 40.80, 40.79. So if we get underneath 40 even, I don't see any reason why we don't trail back down to Wednesday's opening range at 40.80.
Did you know that I got started trading penny stocks, hence the name?
I did, yes.
Yes. And the worst thing to happen in penny stocks, and the reason I stopped trading them, is that they would get so overextended that they would knife like badly, and you would just get screwed. And trading the indices, I have never, ever, ever felt that, except yesterday when the S&P got close to 4,200. I was like, I think this is going to knife. I just got like this overwhelming, like, I think we're going to knife. And that's really why I called you, because it was doing that weird thing where it was like slow, slow, slow. And then I just could feel it, which was, I don't know, it's been a long time since I felt that.
And you were 100% right. But what I think is so interesting and powerful is that when the market doesn't knife like that, when that level holds, those rallies are incredibly powerful because so many people got short yesterday. Let's remember that 90+% of the volume in the S&P is generated by computer screens, not by people. A lot of these entities will say, we're getting short yesterday between 41.87 and 42 even. When the market holds those levels as you were positioned, because we're above the opening range, we're above these big areas, you've got to be long at this momentum breakout traders. You put yourself in a position to really capitalize on that market, holding that rally and extending higher, but the market didn't. We fell apart, in which case you still made money. You still made money and you're on the opposite side of the market. That's how traders trade. That's how traders survive. And that's how traders thrive to survive. And then taking a short underneath if you were there, but at that point, you get up and you walk away. You come back with a fresh look this morning. That's how we trade, and that's the right way to do it. So well done, sister.
Thank you. Thank you. Well, we are about to open. Good luck, everybody. Please go to placeyourtrades.com/Vegas and come hang out with us in Vegas. We'd love to see you. We're giving away a free trip. And days like today with the non-farm payroll coming out and a big rally yesterday are wonderful days to trade event contracts when there's big events in the market. So I'm excited to see where these go today.
I'm going to take a couple of trades in the S&P, and if I find it easily, I'm going to manage it. If I don't, I'm going to shut it down and I'm going to concentrate on the event contracts. As I talked about last week, my cost is low and I can buy my trades. I know what I'm going to do. So everybody have a wonderful weekend. I'm going to go jump into my room with a bunch of traders and trade the open. Have a blessed weekend. Have a profitable day. Don't spend too much time staring at charts and driving yourself nuts. The market will tell us what to do on Monday. But have a great weekend, everybody. God bless you, Penny. I love talking to you.
You too.
Being here with me this week.